Hey, good morning, everybody. It's Hammer. Today is Friday, July 18th, 2025. I'm just looking at the microphone to see if I can get better sound. The sound yesterday was pretty terrible. Let's try something. What if phone on my cell phone? Let me know. Does that still echo as bad? Let me know which one has better audio for those of you that are around. I appreciate you. I'm curious to see if this iPhone microphone is better than the MacBook Air microphone. This is the MacBook Air microphone. So we're just doing some testing. I'm just curious. Let me know in the comments. I'll probably just leave it on here, even though unless it was significantly better with the other one. So, all right, back on track. What are we going to be talking about this morning? Welcome, everybody. We are going to talk about what's going on with next week's economic calendar. The bets on a September Fed rate cut are increasing again. We're going to talk about that. And Bill Pulte is an imbecile. Yeah, I really believe that. So Mallory said better audio with the phone. Deb said Mac is better. Yeah, it wasn't significantly better with the phone. All right, good. Then I'll just do this. Thank you, Mike. Appreciate all of you. So anyway, Bill Pulte, in case you don't know, is the head of the Federal Housing Finance Agency, the FHFA. And, I'm not really big on name calling. I'm also not the president, but the guy's an imbecile. And there's just no two ways about it. And if you're going to call somebody an imbecile, I think we really should be clear on what that means. So I'm going to show you what the definition of an imbecile is and why I chose that particular word. So anyway, remember, you can join me each day, 9:30 a.m. Eastern time, where we get together, talk about what's going on with mortgage rates and pricing, what's driving the markets, and where we stand on things. If you are here this morning, as many of you already know and have done, say good morning. Let me know that you're here. If you're watching on the replay, I ask you to go ahead and give me a hashtag replay in the comments. Let me know that you were here and that we were going well. So I'll go through some of the other stuff, but I'm going to roll right in. I've already rambled enough this morning. So let's go ahead and roll right in. And good morning, all of my friends that are here. I appreciate you being here this morning. So quick recap, what happened yesterday. Let's go ahead and share the screen. Bonds lost a little bit of ground through the day. It really was not much of anything. If we take a look here, you can see that pricing came out at 10 a.m. right about here. And there was just a little bit of a dip and basically ended the day just a hair worse than where we were when pricing came out. Not even enough to remotely worry about a reprice risk on that one. So it was a quiet day there. Bear with me. I'm going to the next one here. So rate sheets today, they're going to be very similar to what we've seen the last few days. And so yesterday was 6.82. We're going to be very close to that. If we take a look at mortgage-backed securities this morning, they're actually up a little bit higher. So we came out with pricing yesterday right around here. So, of course, this is an upward trend. When it comes to mortgage-backed securities, this is one of those things that makes us happy, right? We love to see when things improve. When it goes higher, that is a happy day. Very small difference, and probably nullified by the fact that it is a Friday. Lenders do tend to price a little more conservatively on a Friday over the weekend for protecting their hedging pipeline. So, but anyway, 6.82. And look at where we ended last week right here. And you can see we were right there at 6.82. So overall, this week, this week was much better than it could have been. There was definitely some opportunity to see things get worse. This could have been a much worse week. And it's good that we saw what we saw, especially with the CPI inflation data. If that data had come in a little bit hotter, we definitely, based on the reaction that we got, we could see that it would have made for a bad week. So it's good that we got that. We were hoping to see some surprises that would have given us more gains. Didn't really get those, but we'll take what we can get. We're running rates pretty stable, and overall, again, showing where we're at. We'll go back to it, but rates have been really stable for quite a while. Reprice risk on the day today is low. It's a summer Wall Street day. It is usually there's reduced trading volume. Sometimes you'll see a little more erratic movement in bonds because of that. But lenders and secondary desks, lock desks, they already know this. So we generally don't see reprices worse on a Friday in the summer. Even if we do see bonds move 10, 12, 15 basis points, 15 maybe, but 10 to 12, you're still okay. You generally aren't going to see a lot. So it should be a nice calm day. We shouldn't have to worry too much about that going on. Yes, I did know that. Let me put that on there real quick. So, actually, I'll put the chat up here. So James Mahan, for those of you that don't know, James Mahan pointed out on YouTube, you can go back. So when you do a live on YouTube, there's a little red line along the bottom on the computer and similar on the phone, same thing. And you can actually take that and roll that back and watch from the beginning. What I do, James, when you catch up to this part, I actually watch on double speed. So sometimes I'll start a live that someone else is doing late and I'll put on double speed. And then when it gets there, it starts to stutter. I know I'm actually at the live point and I go back to regular speed. So I like to watch everything at 2.2 speed. I like to do that. So anyway, that's a good thing, but thanks for pointing that out for everybody. So the outlook, it looks like rate sheets are definitely leveling out. Let me go back and share the screen and talk about what we've got for rate sheets. Next week, it doesn't really hold much for economic data. We're probably going to see some of the normal drift. So going over here, let me just zoom in on this to make this nice and big. Well, that's a little too big. All right, there we go. So looking at this here, you can see we've really seen rate sheets that have leveled out. Of course, we went up a little bit from back at the beginning of July, which was right at the end of August when we had our best pricing. But again, we had right here in midweek with the CPI data. That was our worst day right there. But overall, we've leveled out. You can see that same behavior here in bonds. So we have a downward trend. Remember, downward trend for mortgage-backed securities is bad. That gives us the frowny face, right? That's a bad. But we've got a bounce here. And what's nice about this is, let me show you, even when you go down, sometimes you'll get a recovery and then it'll go down again. What we've seen is we had a bit of a leveling. Yesterday it improved. Today it continues. So today is what we call a confirmation of that improvement. Now, how far will it improve? That's a great question. Notice that this 50-day moving average, this red line that you're seeing right here, okay, that has been, we were down below it for a couple of days, but we're back up above that. We would arguably be testing this 200-day moving average. And, if you're just looking at technicals, you could say, well, there's no reason to expect bonds to improve past that. It's going to hit that, and that's going to give some resistance. But really, when we take a look at where markets are, it's not too much to worry about. If we go a little bit deeper, let's zoom in, and I'll go to here's the 10-year treasury yield right now. We're at 4.43 because we round that off, right? And you can see here, same thing. We hit that worst level, and the last couple of days we've gone down. And again, this is yield, so it's the opposite of pricing. So when this goes down, that's a good thing for the yield side, right? So when we look at, I almost had it. Here we go. When we look at the 10-year, that's a smiley face, right? When we go down, that's a smiley face. So we're good here. It seems like we've kind of leveled off. And when it comes to economic data for next week, there's really not much on the calendar to get excited about. So I think we're in an okay spot that next week will probably bring rate sheets very similar to what we're getting now. So when we look at next week, a lot of this stuff really doesn't make a difference for rates. This doesn't matter. The speeches I'm curious about, because we're in the Fed blackout period. So normally you don't see speeches the Saturday before the Saturday for the next Fed meeting. Now, I went and looked up what Powell is talking about here, and he's specifically addressing some bank stuff. So he's probably not going to make any comments about Fed funds rate and things like that. I was surprised to see him on the calendar. I thought that they would be in their blackout, but according to what's going on, he is going to be saying something. So, but I don't expect that to have any effect. So, we basically, Monday, there's really nothing going on. Tuesday, they're not really going to go on. So Wednesday, we've got the MBA purchase index and the refi index. That's basically our apps, right? Existing home sales, and then the 20-year bond auction. So Arguably, the only thing here that's even remotely something markets would watch would be the 20-year bond auction, but that's really not anything going on either. Thursday, we got building permits. Again, more housing data, but it doesn't affect rates. Jobless claims will have a little bit of an effect, as we've seen each Thursday. And the last few reports have come in showing less than expected unemployment applications, so showing a little bit of labor market strength. We're also going to get the manufacturing services PMI data, and that's going to have a little bit of effect. So Thursday is really the only day that we're going to see some economic data that, so far. And then if we go a little bit further, we get to Friday. Friday, you got durable goods and the core capex, which I don't even know what this is. So we're going to put that one as a dud as well. So the only day that we really even have remotely anything to watch is Thursday, and it's not that big. So what does that mean for rates and pricing? It means we're likely to see the technical trends continue to have more of a role, since there's not a lot of fundamentals, not a lot of headlines, right? So we're likely to see that. This morning, we do see mortgage-backed securities are up 9 basis points, right around 99.22. And we've been right around this range before. So I think we could go ahead and I think we'll probably have a very similar to what we have this week. It'll be a flat week. I would bet next week we're going to be very much in that same range as what we're at now. There's not anything to expect much movement here unless we see something in the headlines and it starts to get into more of the tariff talk or things like that. Because remember, August 1st is the date for a lot of these tariffs. But one thing we know about Trump is he will bounce things around and change his mind on things as it suits him. So markets are used to that as well. A couple of other headlines, we'll go over those today. Basically, the outlook overall. Rate sheets are leveling out. Next week doesn't hold much for data. We see some normal drift, but the good news is we're not likely to see any significant losses. Not likely to see rates move up that high. Not a lot of urgency, right? But there's also not a lot of benefit for locking and floating. So basically, it puts us in a position where we want to go ahead and cautiously float. Loans that have more time, there's no urgency to lock at all right now. And the good news is we're likely to see rates kind of come back down. Now, remember, I got a little nervous middle of this week when we saw that rates were just continuing to creep higher. And it was looking like the tea leaves were telling us this was not going to be great, but it's settled down. And, so we're good for that. So I'm going to throw that up in the bottom, cautiously float. The only loans we need to consider locking are loans closing very near term, because there's not anything that gives us clear potential for improving. Every day is a cross your fingers day. Like this morning, we're up 9-10 basis points, but it was a cross your fingers morning. We didn't know which way the markets were going to go this morning. It really kind of depends on where they're taking positions and things like that. So that is what we got going on. Hey, Mr. Randy Teakle. My pleasure to be a part of summer camp as always, my friend, and always wonderful to see you, and thank you for helping me totally improve my shotgun shooting, where I was 100%, 2 out of 2, even if it did take 6 shots to do it. So appreciate you, my friend. Looking on this stuff real quick, going over what we've got here. The last thing that I'll kind of hit out with is the Fed outlook. So we lost a bit of steam. Let me share the screen again, and I'll show you all what I'm talking about here. We lost a bit of steam in the middle of the week when we were looking at Fed futures. The expectation of a July rate cut has not changed. So the dark blue line is today, and as you get lighter blue, it's farther out. So this is a month, this is a week, this is a day, right? So, there's basically everybody's expecting the Fed to leave the Fed funds rate the same at 4.25 to 4.5 at the July meeting. That's the one we're looking at right here on this screen. Now, when we go to September, let's talk a little bit more about this one. So in September, the middle of the week, we had dropped down lower of expecting a Fed rate cut, and we had increased, you see it right here, we had increased on expectations that the Fed would leave rates the same. That has now drifted back. So it's gone down here, gone up here, and it's increased expectations that we would see a Fed rate cut. So that is something to be very aware of. And it's kind of funny, if you look at where we were a week ago and where we are today, it's basically the same. So we're right back where we were. And I'm going to jump over to the December meeting. markets are still pricing in. I mean, look at this. There's about a 25% probability that we will only have one rate cut. Markets do think that this is a pretty realistic possibility, right? The fact of zero rate cuts, this one here, that's nothing that we have to worry about. Markets are just outlier. This is just outlier probability. The biggest expectation, markets are still betting. This is two cuts, right? So this is for two cuts. And markets are still expecting that we are going to see two cuts. That's what everybody's pricing in. And there's still a little bit bigger than I would even believe expectation that we could see three cuts. I think this is going to drop as we get into that July meeting. Now, remember, the July meeting is on July 30th. So if you're looking at the calendar, we've got about 2 weeks before we get to this next July meeting. So we'll see some things changing between now and then, but probably not a lot that's going to change next week when it comes to that stuff. Trying to see if there's any other things to kind of go over here. Fed Waller yesterday. Fed Governor Waller, he's been very dovish, meaning he's been very pro cutting the Fed funds rate for quite a while now. But what he points out in this article is pretty on point, and I'm sure like Ron Siegel would agree. And I know, based on what we've read with like, say, Danielle DiMartino Booth and some others here, he basically said the jobs data that we got last time around, we talked about this, that the numbers came in with the headlines high, but when you peeled it apart, it really wasn't that great. He was worrying that hiring in the private sector has driven his call for a rate cut. He stopped short of saying he would dissent. A lot of times, if they know they're not going to have, they're not going to change the minds of other members, so they'll still vote for leaving rates the same, because I don't know why they don't just go on record saying that they would dissent, but this is the key here. The private sector is not doing as well as everybody thinks it is. And these are the cracks in the foundation. So the headline data, the jobs data, not showing us the truth. If you read deeper, right, most of the employment growth we saw last month was in the public sector. Remember, it was medical and education. And that means private sector is not doing particularly well. All right, so I certainly can't argue with that when it comes to what Waller is saying here, and it makes a lot of sense. So anyway, that's what we got going on. Let me know if y'all have any questions. I did talk a lot yesterday, so we're here today and what we got going on. So let me know if y'all have any questions on where we're at or what we got left here. But otherwise, it's thankfully a nice calm week. Nice calm weekend. Again, reprice risk on the day is low. Shouldn't see anything to worry about. So with that said, what are y'all doing this weekend? So I am here with Mr. Randy Teakle at Vetted VA Summer Camp down here in Lake Texoma on the Texas-Oklahoma border. I encourage y'all next year, I'll do some better promotion on it to share this. It's a lot of fun to come here. It's not your typical mortgage event. There's no stage. There's no rah-rah. This is just camaraderie, community. If you don't like shooting guns, you don't have to. They've got today, a lot of folks are going out on airboats, but it is an awesome event. I actually am still in the hotel. I was going to do some competitive shooting this morning and just got caught up in a project and kind of did not prepare my morning properly. So I'm gonna just pass this time around. I did win last time, so we'll give everyone else a chance this time. And but that's what I'm doing. And then tomorrow we have a lake day where we'll be out on the lake. I'll be driving the pontoon boat. We have a bunch of pontoon boats, and I'll be driving one of them and just taking people out on the lake. I really enjoyed doing that in the past. What are you guys doing this weekend? Sunday, I leave. I'm going to hop back on the bike, and it'll take me 3 days of riding to get home. It's about 1,300 miles for me on back roads, so it does take a little while. I'm going to go up through the Ozarks and up through Arkansas and into Tennessee, and I'll probably stay through Tennessee until I get into North Carolina. I may touch up on Kentucky if I feel like it, depending on kind of what's there. But I've never crossed Tennessee all the way across, so I might just do that this time around. So that's what I'll be doing this weekend. Let me know in the comments what y'all are doing this weekend. Mallory is doing the final fundraising event to benefit Building Homes for Heroes. That is awesome and selfless. Mallory, that is fantastic. I hope y'all raise lots of funds. Randy, yeah, I'm not in the competition shoot for the shotgun, but I was gonna do pistol this morning, and so yeah, it's kind of me to let others have a chance, right? Mike Morano, golf in Northern Michigan with your wife, and then Lake on Sunday. So you know what? Enjoy that time, sir. Enjoy that time with your wife. Be glad that your picture is not all over the internet with another woman, right? Think about that. I know that's making the rounds. The CEO of Astronaut. I don't even know what kind of company that is, right? Is it astronomer, astronaut? I don't even know. I don't even know who this guy is. But man, what a way to get yanked out and caught for cheating. I have no sympathy for somebody. I'm not into cheating. I'm not here to judge, but I'm going to judge. If your relationship is over, have the nerve to make it over. So anyway, I will not be on I-40 through Arkansas. No, I don't want to. I don't go on any of the interstates, James. I just do all back roads. There is no fun at all in me and hopping on the interstate. That's why, I take a few days to do it. It slows you down. It adds a lot of hours. But yeah, I won't jump. I won't touch 40 at all this trip. No, even if I do come in from Tennessee, I'll go around and I'll take like Tail of the Dragon, even though I hate taking Tail of the Dragon. It's a great road, but it's just so driven by idiots. But I'll cut through 129 into Robbinsville if I take Tennessee, or I'll come around a little lower and come up through the other side. So yeah, I won't take 40, even though I live right off I-40, exit 20 on. I can actually see I-40 from my house, like, because I'm up on the mountain. So if I look down in the valley, I can just barely see I-40 for the North Carolinas, 20 miles in from the Tennessee border. So good morning, Kim Mason. All right, my friends. Well, I hope you all have a fantastic day. Have a great weekend. And I will come to you from the road on Monday. So I'll do my best to be on time. But if I have any problems or I'm late, you'll know why. I'm just on the road, and I look forward there. Yeah, it's just no fun to be on the interstate, dude. It's just it's boring. You got to watch for the trucks. You got to watch for stuff getting kicked up. It's not fun. So there's no point in riding. Taking the back road so I don't get weed. Oh, that's funny. Yeah, I don't have to worry about that part though. Thank you, Kim. I will have a great ride. And Brian, thank you for your kind words, dude. I always appreciate it. I was telling someone before, I always feel like such a fraud. You guys come and you join me, and I appreciate it. But I'm like, why do people care what I have to say? Or I feel like I repeat myself so often. I've been saying the same thing. I've done this for like 10 years now. I think I've been doing this since 2014. So it's probably 11 years that I've been running live. So I'm going to come up with some new formatting for this one, though. I think I'm going to adopt a big kind of a podcast format. So, all right, y'all. Well, again, thank you for joining me. Have a fantastic weekend, and I will see y'all on Monday. Bye-bye, everybody.